Right, boys, Strickland.
We've had a couple people pitch this one to us and say, is it worth having a look at? So they had tenements 30 k's to the east of Jundee that they have sold to Northern Star. So
can you imagine, Matty, a company with a nothing but just prospects, no resource on it yet, going to the market and asking new investors to give them $50 million in cash to just have a crack at whatever they might be. So and that's what's fascinating, right? This company's left with a lot of cash.
So the big question is, what's the company going to do with the cash?
Here's a gold company with a bunch of cash and not much in the way of projects. That's the complete opposite to every other gold junior out there, which has a project and no cash.
Money Miners, welcome to one of the last recordings we'll be doing from the OG recording studio, aka Trav's house.
I'm going to miss
probably
this place.
The second last. We are now in the hustle and bustle of West Perth.
You don't have to miss it, Trav. It's your own house, mate.
Jeez, Hay Street's not going to be good for the fucking diet. Jesus, bloody those barn meat rolls down the road. We're going to murder one of them each day.
You promised me you're cycling every day, so you're all good.
We'll wait. Will we held to account? Boys, how are we?
Doing well, mate.
Mate, I'm good. I've been enjoying listening to JD's interviews. He's bloody
great, sensational questioning, JD. Great research, great execution.
Matty, you're going to make me blush, mate.
Mate, very well done on your little Melbourne roadshow.
Appreciate it.
Johnny Forwood and Hedley Widdop, those two interviews are absolutely booming on YouTube.
Yeah, they were good. Plenty to learn from both of them. Really focus on that early stage, right?
Yeah, love it, boys. Right, what do we got in store for today's mining news? There's just a lack of M&A.
Mate, there's a lack of M&A, but there's still plenty to talk about. So we're gonna talk a bit about the macro, and then we're gonna dive into almost staying on the macro theme on BHP and what we sort of took away from their yearly numbers. And then what else have we got? We got a bit on Allkem, a little dive on Strickland. And I think that rounds us off, right?
It does, yeah. I mean, Strickland's a funny one that you've done a bit of a deep dive on. It's one of those funny ones where it's a company with not much in the way of projects, but plenty in the way of cash backing and stock. So it looks a little bit intriguing. We like to dig into those and see what's really going on under the hood. So stay tuned for that one.
Absolutely.
Beauty. Right, before we get into it, we always got to thank our partners, boys. Bondi and Langers at Terra Capital. Thanks always for the great support for the bloody gurus of the natural resources fund, you'd say. We've got a DK's coming on next week for a bit of a rare earths spectacular. So stay tuned for that coming out of Terra Capital headquarters. And
I'm keen to ask him plenty about rare earths because I still don't really understand any of that stuff.
He's the man. He's all over it apparently, and he's been. Hence, Langers and Bondi have said, sort that out for us.
Yeah, and if listeners have any interesting questions in relation to rare earths, let us know, and we'll be sure to ask Dylan Carley, who's the analyst there at Terra, who's all over the rare earth space.
Bloody beautiful. And next, our great friends at JP Search, Michael and Xavier. Now, JP Search, Trav, a soft spot in your heart, like recruiting for the finance industry, bringing the talent. And now, boys, I've been handed over something. I have a testimonial that someone that has dealt with JP Search. I'm just going to read it out to the money miners.
Oh, mate, this is
impromptu.
I love it.
This is a testimonial from an F.ing. Hi, my name is Frank, and I was on the bones of my arse last year. I caught an unlucky break in the finance world and was left jobless after my company went into administration. After exhausting all conventional means of job hunting, I went to JP Search. And both Michael and Xavier welcomed me with open arms and said, Frank, it's going to be okay. Within 2 weeks, they got me my dream job, and I was once again rich as fuck. I've just bought a 3-story house in Noosa, and my Model S Tesla will be here next week.
This is a fake review, sure.
Thanks, JP Search, for helping me soar like an eagle again. Cheers from Frank Ing.
Frank Ing. Wow, Frank Ing.
That's what JP Search can do for your business, everyone. I'd highly recommend looking them up.
Wow. I mean, do the businesses want Frank Ings working for them? I mean...
Frank Ing is soaring like an eagle after JP Search. So shout out to Michael and Xavier.
Oh, well, that's a glowing review. I still don't know if it's real or not, but if it is, good on you, Frank. I'm glad you got a job in your Tesla.
It's real on money of mine. Let's get into it, boys. JD, can you recover from that?
You never cease to amaze me, mate. don't we get into some news, hey? Let's start with the macro, and this one's super, super interesting to me. So it's all about China, and China is essential, it's sort of needless to say to everyone listening, to the world of commodities. They drive almost all commodity prices, perhaps gold aside. So the country slipped into deflation on their most recent numbers. So consumer prices were coming off 0.3%, which is, just the polar opposite to what we've been seeing in the rest of the world recently. And they had some pretty astounding figures out. Youth unemployment figures, so that's for people aged 16 to 24, at 21%, which is just phenomenal.
21% of a fucking shitload.
Yeah, and it's gotten so bad they didn't even report the latest figures. So last week the numbers were meant to be updated, and the Chinese government just said, no, thank you, we won't post those numbers up. Evergrande.
The perks of being in China.
The numbers that you do see, it's kind of hard to differentiate what the real numbers are from the numbers that you do see.
I think that was pretty similar to when COVID hit, and the morgue numbers were a bit different to what actually was happening when they were trying to, I guess, downplay how much COVID was spreading.
So Evergrande Group is one of the biggest property developers in the country there, and they actually filed for Chapter 15 bankruptcy protection in the US last week. So they sort of came onto my radar, and probably for a few listeners, a couple years ago when they first defaulted on $300 billion worth of debt. So like I said, they're no small fish. They're ginormous. They're no longer the largest property developer, but they were for a long time. And it should sort of be noted that Chapter 15 bankruptcy isn't, the final nail in the coffin. It is something that companies do, and in this case, something they are doing to protect their US assets. So it's
interesting because it's the Evergrande property developer, and it's the property sector in China that is an enormous driver of the economic growth that we see in that nation, but also a driver of the demand for the commodities that we produce here in Australia.
It's been enormous for the last 2 decades. It's driven the boom we've seen in iron ore and many other commodities. And like you said, Trav, the property sector in China is huge. It makes up more than a quarter of all economic activity, which is way, way, way bigger a proportion than what you see in the Western world. So they've got a few different challenges, and we won't dive into them too deeply, but they're no longer the most populous country in the world. They've got an aging population, and it just makes you want to take a step back and look at, when you're talking about all the companies we talk about, mining companies, this is just monumental in the potential impact it can have. So obviously we're no macroeconomic experts. It's sort of needless to say.
Even the macroeconomists are not macroeconomic experts.
Well, Jay,
exactly.
You had a yarn was it with Johnny Forward, wasn't it? You talked a bit about China and I guess his views on it.
Yeah, we did. What that related to was oil as well. We spoke about how oil demand had been increasing and would be increasing for the foreseeable future, I think was his takeaway there. But yeah, just tying it back to what's going on in China, they are the driver. I think more than half, sometimes like with lithium, up to 90%, rare earths, more than 90% is processed in countries. Obviously, it comes back out the other end in final product demand in the Western world. But if the demand coming from China pulls away, it's going to be pretty tough. And we'll get into it more talking about BHP, because obviously a lot of their product.
What a great segue into BHP, JD.
Before we do, I've got a couple China points to chirp in to the convo, fellas. One is that the whole China growth bear thesis has been one that a lot of macro guys out there have played for a long time, and in macro land, you can't afford to be wrong for a long time because you just get wiped out on your position. And in the big China bears out there have sort of been bearish for a long time. And the thing that they've always sort of come up against in trying to play that bet is the challenge when like everyone underestimates how sustained the Chinese growth story has been. We all seen pictures of these new cities that they build that are like ghost cities and no one lives there or anything. How is that durable? And China's in some way, shape or form been able to enable that growth in some ways because their debt is denominated in their own currency, and hence they have a bit more freedom to actually drive growth via development in their own currency because their debt's denominated, and they're trying to convince the rest of the world to denominate their energy and other materials in their currency, which gives them more ability to just print more money and create more growth that way.
Yeah, and they don't let the yuan freely float, which obviously has added benefits as well.
Historically speaking, no company has ever been able to create a perpetual motion machine, but we'll see what China is able to achieve in this one. The property sector cooling is a huge thing to pay attention to.
Yeah, so segueing into BHP, what I want to first talk about with BHP, there was a few different aspects to the updates that they gave this week, which were fascinating. First up, I want to talk about their relationship with the Queensland state government, and credit to Mining News. They came out with a hilarious headline, gave me a bit of a chuckle.
It's a ripper.
In quotation marks, BHP's Henry responds to dick move. So, the headline's obviously referring to BHP's CEO, Mike Henry, and the Queensland Treasurer, Cameron Dick, and it's all centred around the coal royalties that came about last year. So that led to BHP having to fork over an additional $700 million in royalties. It was a sort of three-tiered staged royalties that depended on whatever the price of the final product, in this case coal.
And it's only coal in Queensland.
It was only coal that was
targeted.
Targeted
Super
last
profits,
year.
Yeah.
So it led to the Queensland state government having a budget surplus, a record budget surplus of $12.3 billion. That's just for the state. So that's pretty massive. So on the back of that, Mike Henry, the CEO, has been pretty adamant that there won't be any additional greenfields funding going into Queensland. He's sort of said that the sovereign risk and the uncertainty means that no more cash will be going in, although they will continue to invest in the assets that they already have there. And in retaliation to this, the Palaszczuk government...
Palaszczuk.
Is that how you say it?
Anastasia Palaszczuk.
Jesus, there you go.
Close.
The state government has said, and here's a quote from Cameron Dick, the Treasurer, we want those companies to properly develop the leases that they have been granted by the people of Queensland, and if they fail to do so without legitimate commercial reason, our government has the power to act.
Sounds like a bit of a dick measuring contest, you'd say, boys.
Nice one, Matty. Nice one. The takeaway for me is that you can't expect to have it both ways. As a government, you can't impose exorbitant royalties and also expect companies to invest significant capital into the state at the same time. You know, understandably, it's going to be one or the other when you make those sort of decisions. The royalty money is great, while the mine life is there, right? But in the long run, new investment is needed for sustainable economic activity, and hopefully the mining industry and the government over there find like an appropriate middle ground that can achieve both objectives.
Do you think other parties might be swooping in on investment if they get better terms now that BHP say they aren't investing in coal? I think was there an article about Yancoal the other day?
The royalty applies to all companies.
If the arrangement gets a bit more healthier than it is right now, it appears.
I think all companies are going to look at the economic regime upheld by state governments with with a similar lens. For every additional amount of risk you take on, then you need to be compensated for that additional risk by virtue of a higher return. In this case, the risk goes higher because you've got uncertainty in economic regime because government's willing to ratchet it up, and at the same time your return goes down. So you've got to attract a very different kind of investor to BHP who's pretty disciplined about this sort of stuff when you're ratcheting up risk and lowering return at the same time.
Well, what else? Anything other than coal that caught your eye with BHP, Trav?
Oh, mate, there is. And it's pretty interesting, right? They put out some guidance for iron ore, they put out a bunch of guidance. But when you look at specifically at the capex guidance, the amount that they're going to allocate to iron ore, it's a real indicator of the way that sort of BHP is projecting the demand for that commodity, especially when you put it relative to what they're going to invest from a capex perspective in their future-facing commodity book.
So there were a couple other things that stood out to me as well, Maddie. So on Trav's point on iron ore, on the outlook that they have going forward. So they said they see price support in between that US $80 to $100 range, which is for that 62% grade product. And they listed two key uncertainties that they're looking out for. So firstly, how effective China's stimulus policy is implemented. especially in regard to real estate. So that really speaks to what we started the show with. And then secondly, the uncertainty that revolves around the breadth, timing and severity of any mandated steel production cuts. So this made me think of the discussion we had with Kingsley Jones a few weeks back, and specifically talking about the iron ore cost curve. He was attracted to some of the more marginal iron ore players, the high cost producers, and specifically the ones that can move quickly. And to your point on CapEx, Trav, looking more broadly at what BHP has guided, so they spent US $7.1 billion in FY23, and this was up 16% year on year. But the outlook was pretty notable. They said in each of the next 2 financial years, they want to spend US $10 billion, and then over the medium term, on average, spend US $11 billion in CapEx. So when you look at what they've spent over the past few years, it's really hovered in and around that US $7.5 billion range. So it looks like a real step change upward, and potentially what we're going to be seeing going forward, and maybe a sort of response to what many punters might say over the last few years was a lack of investment across a lot of mining assets.
How would BHP de-China themselves? Their iron ore is heavy, bloody reliant on China. How would they become IRA compliant with that? Does this apply to them?
I think you actually saw in some of the headlines that came out of BHP's recent announcements a bit of an indication that they want to invest more smelting capacity in the kind of copper hub in South Australia there. That to me seems like a sort of, an intention born out of the whole geopolitical dynamics at the moment. More localized downstream, where you're adding value to those battery metals in an aligned country, not a foreign entity of concern country, and then ultimately that product becomes the beneficiary of the tax credit down the line in the battery process. There's one more thing on BHP, fellas, while we're still talking about this company that I think is worth sharing as well. And this one, it's actually a tweet from Respeculator. He's got a sharp eye, and this tweet is worth sharing.
Assuming it's a he.
No, yeah, he is. I'm pretty sure he is.
He is. There we go. Confirmed it's a dude.
So Respeculator, he posts a screenshot from BHP's announcement, which is just showing some of the Nickel West numbers. So it shows their average realised price, their EBITDA and CapEx. And his quote is, BHP Nickel West average nickel price is up 3%, but EBITDA down 61%. Shows how badly WA cost inflation is eating into margins. Can see it in the CapEx as well. Cash burn here, which is EBITDA less CapEx, is pretty bad. And that is with a $24,000 per tonne nickel price. It's staggering, right? You look at it, and the EBITDA from Nickel West here is US, $0.2 billion, but the CapEx was US $0.6 billion. So, if you just look at the free cash flow, that's negative cash flow from those operations.
Yeah, they're definitely not world-class operations, Leinster and Mount Keith.
And to your point, Matty, on de-Chinaing the business, there is no way the iron ore business is de-Chinaing, and they are not looking to get any IRA dollars. There's nothing EV related about that aspect of the business at all, which is the flagship BHP asset. Yeah. Allkem, guys, they had full year results come out, I think yesterday or the day before. So we obviously posted up the interviews and didn't have the chance to talk about them.
Are they going to be called Livent? Or
no, the name is yet unannounced.
So it's not going to be, might not be either.
Yeah. So we'll sort of watch this space.
We've had that hypothetical chat, haven't we?
Yes, we have.
I remember. What did we come up with? Nothing interesting.
So there was something surprising about the full year results to me, and that was how much they were talking up the WA focus. So I want to know, we'll chat about after I go through some of the numbers. Are we buying into what they're saying?
Which goes against what we've said previously.
Exactly. So on some of the highlights on the full year numbers, they had revenue of $1.2 billion US, gross profit of $1.06 billion, and a net profit of US $525 million. So that's pretty solid numbers. And they're obviously the product of a notable merger in the past between Orocobre and Galaxy. And now, like we just touched on, they're subject to another one going forward. So getting into the detail, I was actually a bit surprised. I haven't looked at Allkem for a little while. I realised that more than half of the revenue came from Mount Cattlin. So slightly under 600 million US coming from Olaroz, and slightly over 600 million US coming from Mount Cattlin. Mount Cattlin obviously producing spodcon. I think they were producing a 5.3% grade product, and Olaroz producing lithium carbonate from the brines in Argentina. And on guidance going forward, Mount Cattlin's numbers were guiding to a midpoint of 220,000 ounces for FY24.
Ton.
You're right, ton. And that's not bad considering this year just passed, 131,000 tonnes was produced.
Yeah.
And on Olaroz, they're expecting a production for FY24 of a midpoint of 24,000 tonnes on the back of 16.7 thousand tonnes. So things are going upward, and they've got quite a few projects in the pipeline there as well. So on that WA focus, and then chatting up the interest, I'm keen to see if you guys think they have if there's any merit to this. If you look at some of the facts, the company has said they're moving the headquarters to North America. They've got quite a North America focused business. They'll have assets throughout the Lithium Triangle in South America, as well as up in James Bay in North America. But on the flip side of that, they said there's secure tenements in and around Bald Hill. Here's a quote from the CEO, Martin Perez de Soleil. Allkem is interested in acquiring Bald Hill, and we will also be looking at assets in WA that add value. So like you touched on, Matty, we'd made the prediction that they would probably sell or pass on, Mount Catlin
especially they look like they were sexing it up with that underground feasibility study.
Exactly.
But that might remain in the portfolio. We were just spitballing. We had no intel either way. But with those comments from the top dog, it may appear that going underground at Mount Catlin might stay within the Allkem Live All, whatever they're going to be called, within their portfolio.
I looked it up. They haven't agreed a name yet. They're just calling it Topco for now.
Yeah.
I suppose that's a player we have not discussed or considered that could be in that Bald Hill race. And in that region. So that'll add a whole nother great piece of news to Money of Mine if that is the case.
It'll be the first time someone's ever racing to get bold. I've been trying to prolong that one.
You need to put it in reverse for a bit, travel, I think.
So I think after 4 months of doing this, we've all learnt to be, to not take what CEOs say at face value, and I definitely don't. But
especially about capital raisings.
Oh yeah. But just given how strongly free cash generating the hard rock lithium assets have been in WA, it sort of warrants that Allkem are going to look at potentially putting a bit more cash to work in the state.
Going to be interesting, right, boys? Strickland, STK. Now we have covered them before briefly because they did the deal with Northern Star. They sold their asset, the Millrose asset, to Northern Star, which is 30 k's from Jundee. JD. Let's think about this company. Will shareholders get a benefit? We're about to find out after JD runs his bloody microscope over it.
We've had a couple people pitch this one to us and say, is it worth having a look at? So let's take a look at it. Matty, the transaction you spoke about, they had tenements 30 k's to the east of Jundee.
Yep.
That they have sold to Northern Star. So what they received for that transaction was $39 million in cash and 1.5 million ordinary Northern Star shares. So those shares will be escrowed for 1 year. At $11, which is roughly what Northern Star is trading at, those shares have a value of $16.5 million. So all up, cash and shares, they've got about $55 million worth. Now the deal was valued at $61 million when it was flagged a month or two ago, about a month and a half ago now.
Yeah, interesting. So it was a $61 million deal, and the project there had a resource of 346,000 ounces. So just the very, very, very rudimentary EV per resource ounce calc for that transaction multiple, shows you that it's a $176 per resource ounce multiple there. And that's about on par with what we saw with the Musgrave Ramelius bid, right? Ramelius's implied offer valued Musgrave at $197 per ounce at the announcement. Both of those have mill synergies, and it just speaks to the fact that when you have ounces that can be leveraged in a nearby mill, and maybe that mill can process those high grade ounces and displacing other lower grade ounces in the process, when you do that, you attract a juicy premium.
So here are the highlights. The market cap is about 65 million. Like we just said, about 55 million came in from the deal, and they had 1.6 million at the end of the previous quarter. And now that transaction closed on the 25th of July. So getting into what the Millrose project was. Like you said, Trav, 346,000 ounces. This was 6 million tonnes at 1.8 grams per tonne. And like we said, it's sat 30 kilometres east of the Jundee mill, which is east of Wooloona. Now, they bought this only 2 years ago. They bought it for around about 11 million. They said that they spent 16 million on drilling and then obviously selling it for 61. Like we touched on, the company flags a $35 million return.
I think because I think initially they put out, I think it was an 11-month, they said for an 11-month program. I think their initial program was 23,000 metres of RC and 8,000 metres of diamond. So
yeah, and it was interesting that they had the 346,000 ounces when they purchased Millrose, and it was the same number of ounces quoted when they sold it. So they'd obviously put holes in the ground, but not updated.
But didn't do the resource.
The resource.
Saved a bit of coin there, I guess.
So the big question is, what's the company going to do with the cash? And here is a quote from the deal when it was announced. The transaction will allow the company to aggressively upgrade its portfolio of existing gold prospects on the Yandal Belt to a standard similar to that of Millrose. So what they're planning on doing is hitting multiple targets that they've identified. These all sort of sit to the northwest of Millrose with RC and diamond drill holes. So they've got 35 kilometres planned already.
I think they're doing air core at the moment.
Yeah, I think that's right. Yeah. And they've also got plans to continue base metals exploration. So they've talked quite a bit about their zinc lead targets, and they've had some pretty interesting hits, to be fair, but it's a pretty contrarian play given the sort of debate we're seeing around, zinc and lead and how assets of that sort of commodity, or those two commodities rather, are performing. They
were looking to demerge them.
They were, yeah. So the last thing they say around planning is assessing new opportunities. So they break out a use of funds, which is pretty remarkable for an exploration business. We'll flash it up on the YouTube for people watching.
$50 million.
Yeah, and for those,
look, can you imagine, Matty, a company with a nothing but just prospects, no resource on it yet, going to the market and asking new investors to give them $50 million in cash to just have a crack at whatever they might be. So, and that's what's fascinating, right? This company's left with a lot of cash and a bit of bloody pasture, which I don't know how prospective it is. I don't have that skill set.
It's in that Yandal belt. Look at imagine if you found another Jundee.
Yeah, it's pretty wild. Yeah. So for those listening, the use of funds was $18 million in year one exploration, $11 million on year two resource definition, $7 million is set aside for acquisitions, and $5 million is set aside for working capital. So if everything goes to plan, they could be out of cash in 2 years. Must be going for a
But they're going all in. They might find a big humdinger of a deposit.
That's it.
I think you have to, my read on that is you have to tell the market that you're going to create value by exploration, but you might just really want to do a deal instead. And these guys look like deal doers rather than creating value from exploration, given the fact that they literally sold the same asset without adding any more ounces to it. I wouldn't back them to add ounces to a project. Maybe the play there is they'll do a deal and make more money doing deals.
It's not a bad play from them to just poke the holes in and then sell it and not even have to worry about doing a resource upgrade. So,
and to your point,
do that again.
To your point, Trav, on how you sort of regard management and what the market is kind of saying, they're clearly not placing a lot of confidence in the strategy that the company has, given the sort of cash and scrip backing relative to the market cap of the business. It kind of reminds me of St. Barbara, and I mean, to be fair to
this doesn't sound good.
To be fair to the Strickland team, they haven't, done what St. Barbara has done, but just the dynamics of the cash backing reminds me of that.
I mean, Barb's was trading at a negative EV for a point in time. This company doesn't quite have that dynamic. Yeah. So at least these guys aren't trading with a negative EV, but it is really, really interesting nonetheless. I kind of think of the company's dynamics as well. So here's a gold company with a bunch of cash and not much in the way of projects. That's the complete opposite to every other gold junior out there, which has a project and no cash. So I actually see
the projects are worth fuck all at the moment in this market.
Yeah, and so that's why I think what's most interesting about this company is, could you imagine all of those gold juniors out there that have a decent project like Strickland would be an attractive merger opportunity for them, because that gives them access to cash, which they can actually then put into their project, and hopefully they create some value. And when the market turns and developers are on the rise again, they're closer to production. So it's fascinating, right? Because I think Strickland being this bit of a shell with a bunch of cash is really interesting from the perspective of the gold juniors that have the opposite dynamic at the moment.
It's like a bit of a parlay, isn't it? They've made a heap of cash from this transaction. They've put the holes in the ground. They've found a good deposit, and they're like, right, can we do it again? By poking a heap of drill holes. So chances of success are much higher because they've got so much cash to pump into drill holes.
I don't think we'll see that cash go into the project they talk about here. That's my prediction. They won't put all that cash into the project that they have.
Oh, yes, you heard it here first.
It'll go into another project. Because they'll do a merger or they'll acquire something, and they'll put that cash in something that's a bit more prospective, is my guess.
So I had a couple takeaways, and investors can sort of take it at face value. But one is that investors went into this with the gold focus, so they might not necessarily want to partake in a zinc-led exploration-focused business. Another was that shareholders want returns, and that's the likely reason why the EV is so small. Investors are skeptical about the company's ability to reproduce another performance like they did with Millrose. And they also think, clearly to your point, Trav, that the capital will whittle away within the business, hence they're not putting much value on the company in terms of its EV.
I suppose everyone asks as well, what's, I guess, from the Northern Star side of the fence, what's their strategy? So, like with buying it for Jundee, everyone's like, oh, is Jundee running out of gold? Doesn't appear so. So it looks like Jundee's got a lot of life left in it. So they've got 1.5 million ounces in reserves there. They produce 320,000 ounces for FY23. So, look, you got, at that rate, you got 5 years of reserves plus what they'll add in from exploration as well. So they're definitely not running out of gold there. There's still shitloads there, and there's shitload more to find.
Yeah. Would it displace something slightly lower grade potentially in the near term?
Yeah, definitely. Yeah. It's like, it still has to be, resourced, reserved, mine planned, permitted, and so it's possibly a couple of years away, but look, it's there and just add to it. So why not? Look, as you said, JD, they didn't update the resource, but Northern Star, so you look at this cross-section here, Northern Star obviously sees a lot of potential in the down-dip extensions for this Millrose project, because they're all very, very shallow holes, their program.
Yeah, and I think the per ounce acquisition that we spoke to is kind of obscured a bit, given that there was no update in resource, but they did put holes in. Northern Star clearly think there's more ounces than that latest resource would imply.
I'd say, they'll be going a lot deeper holes, which is... I suppose Strickland side, it's not as good bang for buck for them. I suppose throwing down dip extensions, but longer drilling costs more. So whereas Northern Star will definitely put the holes in to define that further down dip.
Agreed.
So I think Northern Star will definitely have their eye on what's going to come out of. They've got the 40,000 metre aircore program at Horsewell, Strickland, that they're starting soon or started. So obviously easy for Northern Star. The small cap can sort their own money out, put the holes in, and if something comes up trumps, they can take it after the hard work's been done. So
yeah, that's it. That's the theme we're seeing in the market.
Good, nice, easy play for them without having to run their own exploration programs.
Yeah, so time will tell how Strickland sort of plays out.
Yeah, very good, boys.
Good stuff, guys.
Nice, short and crisp. God, you know what I can't wait for, JD? Tomorrow. So I get to do another sponsorship presentation. It's the highlight of my day, and watching your face of dissatisfaction.
In what world is 40 minutes crisp?
Don't worry, sponsors. I'll keep the relationship positive. Thanks to all our sponsors, the ones mentioned today, JP Search and Terra Capital, and our other partners at Top Drill,
Anytime Exploration Services,
and K-Drill.
Thanks a lot, guys. Appreciate it.
Great feedback. Sponsors are loving the alternative strategy, JD.
They sure are.
I reckon I could take it up another level. What you should present tomorrow's one. I want something from you.
I will happily present it, mate. Hootaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.